Hey, what's up, everybody? It is Thursday, February 4th. New highs in the stock market today. I told you that was going to happen. Fiscal support, fiscal expansion, that's just going to get bigger. I mean, right now, the amount of fiscal flow into the economy is at an historic level. And we're going to get even more with the Biden stimulus. And it doesn't even matter if it's not his proposed 1.9 trillion. It doesn't have to be. I mean, Goldman Sachs was kind of wringing its hands like, oh, we're only going to get 1.1 trillion. Morgan Stanley was like, oh, it's only going to be 800 billion. I mean, those are huge numbers to tack on to what is happening right now. The deficit is already like 860 billion. We're 4 months into, we're 1/3 of the way into the fiscal year, man. We're at 860 billion on the deficit. I mean, we're at 580 billion in spending above where we were at this time last year. So, I mean, it's huge. I want to talk about the reappearance of the dollar bulls. Yes, the dollar bulls are back. Everybody's all excited about the dollar going back up. I see a lot of commentary. One guy posted on Twitter that, hey, this may be an historic macro change in the trend of the dollar because it happened with the Georgia runoff elections. Like, the Georgia runoff elections dictated exchange rates? Nah, I don't think so. Now let me say something here. I am short the dollar based on really policy and the macroeconomic fundamentals that are in place right now, which is expanding fiscal deficits and trade deficits, and there is no policy in place right now that is going to turn that around. Maybe in 2022, you get the Biden administration switching to, more fiscal consolidation, but that's not going to happen in the first year. I've been saying that. All right. The dollar bulls are looking at a pickup in the growth rate of the U.S. economy. Hang on one second. It's New York City, folks. They're looking at a pickup in the growth rate of the U.S. economy. We could have a much stronger jobs number tomorrow. I don't know if I said that already. But let me say something. There's no correlation. There's no axiomatic correlation between strong economic growth and a strong currency. And indeed, I would even argue that in many situations, you see countries with weak currencies that have strong economic growth because they are export-driven economies. The United States is not an export-driven economy. We consume more than we export. We are a net importer. So the dollar's rise is not sustainable under those conditions. All right, you may get a period like this where you see portfolio flows moving into the dollar because people are saying, oh, look, the economy is strengthening. Maybe it's strengthening a little bit quicker than other economies. So people put money into the dollar. Maybe interest rates rise relative to other currencies. But the big macroeconomic factors continue to be expanding fiscal deficits and expanding trade deficits. So this is another rally in a bear market, all right? Not sure how far it will carry, but a prudent trader will use this to sell into, to add to the short position, which I'm doing right now. Small increments as it rises, and ultimately you will see at some point down the road the dollar will be at much lower levels. Now, if you're going to trade these big macro trends, all right, it's not easy. Some people might say, well, Mike, if you see the dollar going up as a counter trend move and it's got some legs to it, why don't you just take advantage of that and go long? The reason I don't do that is I don't want to lose my core position. If I get out and go long that's basically going against my outlook, my view, my strategy. It is like a disruption to the mental game. So I stay with my big picture view, but at the same time, I understand that these kind of things can happen in the process. I mean, you could have a position on, and you will have to ride through a period of time where it goes against you, understanding that you can utilize that counter trend move to build a bigger position, against the crowd. And then when it resumes back in its primary trend, when the dollar starts to go back down, I'll have a much larger position on. That's exactly what I did in the period from 2018 to, last February, when the dollar rallied up. And for those of you who had followed me for that period of time, I kept saying, bear market rally, bear market rally. It gave back pretty much all of that entire rally, where we got down to like 89 on the dollar index. The low, I think, in February 2018 was like 88.25. So now we're popping back up a little bit. So that's what's going on. Anyway, all this, of course, in my report, my emails that I send out. Don't forget, check out my podcast. The link is in the description here. And if you like this video, please click like and subscribe. See everybody tomorrow. Bye-bye.